I love being able to work in something that protects ownership. I mean, June is National Homeownership Month, and I think title insurance does a really good job at protecting that for the end consumers. So I'm really passionate about that. I'm really passionate about helping my agents grow, making sure that everyone's educated in the process, and I work with really great people. I mean, my job is only as easy as the people behind me, our underwriters, our search and production team, and so they make my job a million times easier, especially when I'm forward-facing with our title companies and law firms. It makes my job that much easier knowing that I have them in the background doing all the behind the scenes stuff.
Hey, welcome back to the Real Estate Excellence Podcast. Every real estate transaction has a closing, and behind every closing is a title company working to make sure the deal is clean, the title is clear, and the money goes where it's supposed to go. But most agents, buyers, and sellers have no idea what's really happening behind the scenes or how much they're exposed to when things go wrong. My guest today is an agent and account manager with Fidelity National Financial, the largest title insurance company in the United States, right here serving Northeast Florida. She works with title companies and real estate professionals every day to make sure deals close correctly, buyers are protected, and fraud doesn't win. Please welcome Megan Lopez to the show.
Thank you so much for having me.
I appreciate you coming down here and digging into you here a little bit of your background. It's an important topic. Obviously, we're seeing the advertisements right now, a lot of stuff about people stealing other people's title and all that kind of stuff. So we're going to get into that. I'm going to move this mic a little bit angle towards you there. Tell us a little bit. Let's start a little bit. This is the easy softball question. Young Megan, I imagine, was real estate actually her vision, getting into the real estate industry, I'm going to say? Or, you're a young person, you graduated from college. What actually was your initial aspiration?
Sure. So I'm sure, as most people, they don't grow up saying they're going to get into the title industry. Most folks don't even really know what the title insurance industry is. Fortunately for me, my dad was in the business for over 40 years. So my sister is also a manager for a title company. My mom was a real estate paralegal. So it's very much in my blood. And so when I was in college, I actually was working part-time for a real estate attorney in South Florida. That's where I'm originally from. And yeah, I was there for about maybe 6 years. I started off just as a receptionist, answering phone calls, and then slowly kind of started learning the ins and outs of title and processing and closing. And from there, I became a licensed title agent. And so did that for, like I said, for maybe about 5 or 6 years. And then I moved up to Jacksonville in 2018. My husband was in the Coast Guard, so that's what brought us up here.
Oh, awesome.
Yeah, and worked for a title company here for a little bit, and then the position opened up at Fidelity. I kind of came on board more so as a support role for the account managers that were already there, with the intention to eventually become an account manager myself. And now I've been with the company for 8 years. And like you said, we partner with title companies, law firms, real estate law firms to help them get to the closing, right? So we issue the title search and the title policy at the end of the transaction.
All right, not to go into a total infomercial there.
Sure. Sorry.
She was prepared for the show. Let's
sorry.
No, that's awesome. I'd love to have your husband on and talk Coast Guard. I wish I just had a podcast about that because we do boat. We're a Freedom Boat Club member, so we're out every weekend all the time. But I'm sure he's got some good stories too.
Oh yeah, no doubt.
What are some of the things that really? Because you see some things going on in real estate. As we go through our day to day, as any human, we have a curiosity. At least I do. That's why I do the podcast. Mm-hmm. Curiosity to meet people and so forth. But what's some of the things that kind of really have amazed you that you've learned about the real estate industry, and from the standpoint of this, this whole fear that technology is going to take over our industry, mm-hmm. but really when it comes down to every individual house, every individual lot, I know there's a lot of moving parts mm-hmm. that I don't know if technology's in our lifetime going to be able to capture that. It's not like buying a shirt in the store.
Right,
Yeah.
right. I'm sure, as you're aware, we're very much a human, people-to-people type business.
Yeah.
And I think that's the same for the title industry, too. I do see that AI is playing a part, but I don't think it will actually ever take the whole part of the title side of things. You'll see it in the softwares where we're able to now navigate things a little bit easier, streamline processes. But it's funny because they've actually tried to see how the title insurance the piece will work when using AI. And anytime it has a lot of information, it's usually only about 70% accurate.
Yeah.
And unfortunately, we're not in the industry to have that big of a margin where things can go wrong. We want to be as close to 100% accurate as possible. So I really don't think that AI will completely take over what the title professionals do day in, day out.
Not anytime soon.
At least not anytime soon.
Yeah.
Let's hope not.
Because, I mean, especially in, I know there's a title company in downtown, you probably know who it is, in St. Augustine, that I guess I remember them, this is years ago, probably 7 or 8 years ago, I remember them saying this. I guess when being the old city of St. Augustine, going back hundreds of years and so forth, that when the county actually and the city went over to electronics and scanned everything, they actually, I don't know whether they bought or took over the actual paper. Wherever they store that, I don't know, but I remember them saying that. So if you have a title search in the old city and you need to go back, beyond with somebody, I imagine, as I know, I had a relative who was an attorney who got into this stuff. He was talking, some of these title searches, they go back to this, hundreds of years. And you need the paper, and you need a human. The technology's not there. It'll just assume something and slap it together, where you really need a human to dig deep.
Oh, yeah. Actually, our office is located pretty close by, and we have a title plant. So some of these records, the deed books, if you're, a history buff, it's actually very interesting going back and looking at some of these old records. They've sustained the fire. We had a fire back in the 1900s, and literally a title company took these by boat from the courthouse to preserve them, and we still have them. And it's really interesting to see these records go back dated as far as they do.
What do you find the most interesting about your particular position right now? Well, for the audience, and correct me if I'm wrong, I'm just going to put out your position is representing Fidelity National Financial, which you can branch off in a few minutes about, because Fidelity has a branch of different companies. You have Home Warranty and some other companies there. But your particular position, what is your role with Fidelity in being that conduit between the actual company and then helping out the individual title company? What do you call them? Agents, I guess. Is that what you call?
Agencies.
Yeah, agencies. What is your role there?
Yeah, so my role, like you said, I basically bridge the title company with the underwriters. So we have a wealth of underwriters that help our title companies and law firms get the transaction to close, right? So they're helping them with these complex transactions. They're we're actually performing the title search. So we're seeing who has legal ownership of the property. We're seeing if there's any outstanding liens, open mortgages, things that need to be cleared at closing. And that's what the title company is doing. So we basically give them the commitment, we show them what needs to be cleared, we identify these issues, and then they're resolving these issues prior to closing. So on top of that, I also work somewhat as a liaison, so I'm helping on the business development side for a lot of these agencies, sales, marketing, bringing them tools that can help them with their business. So it's kind of all together.
Let's really gumpify this down.
Sure.
The actual process. Contract comes in. Usually it's the lender, if there's a financing involved, is going to order title.
Well, the title company orders title.
Well, we're ordering the title from the title company. Then they're probably, yes.
Yep.
So the title company locally here, you mentioned J.R. Riley earlier. They're very popular. Who in that office is doing what? And then when does Fidelity actually come into play?
Sure. So like you said, it goes under contract. Buyer and seller go under contract. The agent will take that contract to the title company or law firm. From there, they order the title search from us. And like I said, we basically do a full overview. We check historically who has legal ownership of the property. We're running the searches to see if there's any open mortgages, outstanding liens.
So Fidelity is actually doing the actual...
Correct. For the most part, we do have some agencies that have independent title agencies, but the majority, at least in the state of Florida, are utilizing us as their search department.
Is it just some some of them do it a little bit on their own to save us some dollars, I think, or
honestly, it's few and far between. I have maybe a handful of agents that still have their own search and production department.
Because imagine with the technology that's involved today and the resources that you guys have as a conglomerate, it's much more effective.
Agreed, and that's why you don't see it very often. For the most part, we are performing the search on behalf of the agencies themselves.
All right, so your people, what did you call it? What department?
They're search and production.
Search and production. They're digging deep into that title. What happens next?
From there, once we disclose everything that needs to be cleared prior to closing, that's where the title company comes in. So they're getting back the title search report that has all of these outstanding liens, mortgages, anything else, HOA fees, things like that need to be cleared prior to closing. That's what they're reviewing and making sure that all of that is taken care of prior to closing. But that's where title insurance kicks in. Unfortunately, there are some hidden risks, unknown things that it may not show up on the lien search or on the title search. I apologize.
From the legality of things, right? Whoever was the most recent lien is first lien, right?
On the mortgage, right?
If someone goes and does work on the house and files a lien at the county, but for some reason that doesn't get to where it's supposed to be, so you guys can see it on your screens wherever that might be.
Yep. So if there's
but all of a sudden that pops up later, it actually becomes a priority lien. Am I right, or is it actually still going to fall behind the mortgage?
Sure, and that's where title insurance comes in.
Yeah.
Most lenders would require you to get a lender's policy to protect their lien priority status. So they want to make sure that they are first lien priority. So that's where title insurance protects the lender, and there are two types of policies. There's the lender's policy, and then there's the owner's policy, which is purchased separately, and that protects the home buyer from any hidden risks that could potentially arise after closing.
All right, so this is going to be a good educational reel. I'm
Sure.
going to give you the raw material so you can cut this up later. Explain this. I imagine you probably get this question all the time, or at least the agents do
Sure.
that you work with. What is the difference between an owner's policy and the lender's policy? Why can't just the lender get the policy? Why should an owner get a policy?
Sure. So the lender's policy protects the lien interest of the lien holder of the actual mortgage company, whereas if you purchase an owner's policy, it protects the home buyer. So they're not the same, and they provide two separate coverages. And the owner's policy is paid once at closing, and it protects them for the life of them owning that home. So it protects their interest in the property in the event, let's say there's an unknown heir. Let's say that the property went through probate and there's an heir that comes up years later trying to claim ownership in the property. That's where title insurance comes in. It protects their interest in the property. It protects them from any, financial legal fees that potentially could come up if they have to go through court litigation, all of that. And so it's...
All right, I'm going to challenge you here a little bit, because here's the common sense question, and I know you get this one a lot
Sure.
too. Well, the lender's already got a policy on there, and they're going to fight for their position to be first. So if someone comes up, a family member comes up and says, "Hey, I actually own that property, and it's already been sold to the buyer who has the loan," the lender's just going to fight it anyway, because they're going to want their position on it. So where does the owner policy protect the owner?
Sure. I mean, at the end of the day,
Or the value in the owner's policy, I should say.
Yeah. Yep. So the value comes in the fact that they thought that they were purchasing the property free and clear from, anyone coming after their interest in the property. And so if, let's say, an owner doesn't get their owner's policy, now potentially they could lose interest in the property because it was purchased, it was owned by somebody else. So their protection is up to the amount of that policy of the purchase price. So let's say somebody does come back in saying that they own or that they have interest in the property, they can file a claim with us as the underwriter to make sure that that's protected and that they have full coverage for what they paid, considering they thought it was free and clear.
I'm going to throw you on the spot here on this one.
Sure.
Have you had a situation where someone didn't get the owner's policy? A story maybe, we know it's probably happened, but I don't know if you got one off the top of your head where someone didn't buy the owner's policy. They only got, the lender just got their policy, and the owner, whether it cost them money or they kind of
Yeah, sure. So a story that I have with that is it was actually a new construction. And I think a lot of times owners are like, why do I need owner's policy? There was no one that owned it prior.
You really actually need one there.
Yeah, there's no one, no one owned it previously. So why do I need title insurance? That's where mechanics liens come in. Let's say there's any outstanding mechanics liens for work that was done on the property. They can come back for you for that.
Yep.
And if you're not protected, now you can essentially be on the hook for that. And again, you're on the hook for legal fees, any court fees, things like that. So that's one that kind of comes to my mind that a lot of folks are like, I don't need it. There's been no previous owners. I don't need title insurance. When in fact, yeah, you do.
and knowing in another life for me, years and years ago, working with builders as a vendor, they don't pay their bills on time.
Yeah.
They really wait for that house to sell, and then they pay every invoice on that house when it sells. So if that house sits for a while or it takes a long time to build, and the guy who was there, pouring the slab still hasn't been paid yet, he might say, it's been 6 or 8 months, you haven't paid me, I'm going to apply a lien on it. And that needs to be cleared off. And they may think they did it, but they really didn't. And it can happen because the builders, they really don't pay their bills on time. They'll stretch the smallest guys out 90, 180 days if that property's still not sold yet.
Right.
They'll wait till they get their money, then they'll go and disperse. Even the biggest builders.
Right.
Now, can I say everyone's like that? No, hopefully they're not all like that. But there are some of these biggest national builders that will not pay those vendors on those invoices on that house until that house is actually sold and they've got their money. Then they'll disperse to you. So they're not going in their pocket at all there. We're going to get into some of the questions that I've prepared for you here a little bit. So obviously, some of these are really softball. But I think the point you made, we were talking pre-show, many of the agents, some of you that are listening to the show right now, you fully don't understand what's the importance of title and what's the importance of title insurance and being able to explain it to your customers, because in Florida, the lender's policy to me is not cheap. It's state regulated. Tell us a little bit, how is that determined?
Sure. Yeah, so in Florida, the title insurance rates are promulgated, meaning they're set by the Department of Financial Insurance, and it goes based off the purchase price. So it's typically tiered. Usually it's per thousand. I won't go into all the detail of how it's calculated, but basically it's based off of the purchase price. So let's say you're purchasing a house that's around $300,000-$400,000. On average, you're paying about maybe $1,500 to $3,000 for it, but it's a one-time fee, like I mentioned.
Okay. And threw you on the spot on that one.
Sure.
It's not. Well, it's state regulated.
That's the bottom line.
That's the bottom line. It's state regulated. So when they see that on there, there's nothing to argue about, and it is what it is, and the state regulates. Now, from a profitability standpoint, from an insurance company, because that's what you guys are doing, you're insuring this title policy. It's an insurance, because if someone comes back later that you guys didn't catch that mechanics lien for a guy who did the drywall and there's a $10,000 bill still outstanding, you guys are covering that because they bought the insurance.
Correct.
From that standpoint. So whether it is based on the purchase price, and so someone buying a smaller home, their insurance policy is going to be smaller. Could they still have a $10,000 lien for the drywall? Hell yeah. Could they have the same $10,000 lien on the person who, well, obviously, hopefully, I would think there in a lot of places there's more drywall in a $800,000 home or $1 million home,
sure.
but you're paying that much more because the claims could be that much bigger.
Yep. Yeah. Well, and not just that type of lien, but it could be taxes, judgments, things like that could attach to the individual who owns the property as well. So you want to make sure that those are all cleared out prior to closing.
So what are some of the things, and obviously the list is probably endless, but what are some of the biggest things you guys see claims coming in on?
Well, right now, fraud, we're seeing a lot of, those are usually the biggest losses because, like I said, we're covering up to the policy amount on those. So let's say you're a home buyer and you purchase a property and you purchase it from a fraudster who is selling it as a vacant land or something along those lines.
They're acting as if they're the owner.
They're acting as if they're the owner, and they close on it, assume they have the property, and then come to find out the true owner actually did not sell the property. We're getting insurance claims for those, and we're covering them.
Wow.
Yep.
Because the transaction, the title company, you're actually clear. So they're
we're covering the fraud involved.
You're covering the fraud. Well, I'm just trying to think what's the. From what I heard, and this has been a couple years, a lot of that stuff was actually happening, especially with some of these vacant lots, where maybe it's $10,000 or $20,000 lot or whatever. Maybe it's a little bit more, but typically cash. So it's a quick transaction. The lender's not getting involved in needing a lender's policy. So they're doing this cash transaction, and somehow it's sliding through that this person owns the home. What are some precautions that Fidelity is doing? And obviously, I imagine you're spending a lot of time educating your actual agents on the ground.
Sure. Yeah, and I think education to that point is something that we need to get across the board to the realtors, because that's the first line of defense right there. They're working with who they think are the sellers, and a lot of times they're not local, so they never meet them. They're primarily just speaking with them over the phone, and they think they're communicating with the true and accurate owners. And so some of the recommendations that we suggest to our title agencies and to the realtors, first and foremost, is if you can, try to get on a video call with them. Sometimes that'll scare them right off the bat if you recommend that. Perhaps getting 2 forms of identification, so get a driver's license and maybe a social security. We've seen in the past, and we have a bunch of stories like this, but one of my title agencies received 2 forms of identification, and they were the same photo on each, which obviously, your ID and your social security shouldn't have the same photo. So there's, red flags that can come up like that. And then another thing that title companies are doing to help protect this is they're checking to see what the address is on the tax, the mailing address of that, and they're mailing them a letter to the homeowner, and they're basically stating, hey, we're handling this transaction because of the uptick in this type of seller impersonation fraud. We just want to confirm you're the true, accurate owner and you are in fact selling this property. And so if you are, give us a call, and there's usually a code that they give to confirm that they are truly selling the property.
Yeah.
But if you're a real estate agent, I would also just look out for some of the red flags. A lot of times it's a quick close, like you mentioned, a cash transaction. Usually there's...
a lot of times they don't even want the real estate agents involved, because that's another layer of someone investigating who they are.
Yep. You'll also see that they're usually listing it for below market value. So a lot of times too, they want to use their own notary. So just some of these types of red flags, I'm not saying you need to completely halt the transaction, but just take extra scrutiny to make sure that you're actually dealing with the correct sellers.
Well, I would imagine, like a bank, obviously cybersecurity is huge. Fidelity is spending a huge amount of resources on doing whatever they can to find out everybody's who they're supposed to be in these transactions.
Yep. So a lot of what we do is educate them, but we also partner with third-party vendors to offer these services to title companies and law firms to utilize these verification platforms. So they go on, they do like a multi-factor authentication. They also will put a picture of their driver's license and they'll scan it. They'll check to see, did they recently create this new email address? How long have they had it for? If it's fairly new, most people are not creating new email addresses.
Right.
Where is their IP address coming from? Where are they located at that time of them actually doing the signing? Are they in another country? These are all red flags that they look out for.
Yeah.
And so these technology platforms have been a huge help in verifying the identities of the sellers.
What are a couple of tips to the agents that might be listening that you guys are, probably teaching in classes and so forth, or mentioning some of the red flags that the agents should kind of perk their ears up that, hey, maybe this person isn't who they say they are?
Yeah, I mean, gosh, they're getting so sophisticated. I think before you can kind of tell in their communications, in their email, they were, things were misspelled. Now with AI and all of those types of technologies, it's becoming a little bit harder to target it. But I would say, again, the best way is to jump on a video call with them. That really does make a big difference too, because if you're only communicating via phone, via text message, there could be red flags that you're just not even aware of because you're not seeing it. Again, the 2 forms of identification is a big one as well. And then working with the title company, making sure that they have the correct, accurate communications with the title company, because ultimately they're the last line of defense to confirm the true identities of the sellers.
And not to advertise forewarn, but every agent should be forewarning everyone they're working with,
Absolutely.
whether you think you're going to meet them or not. They might be calling you from New York and saying, hey, I need to sell that house. You're not going to see me, so you don't need to run. No, you need to run forewarn on. Make sure they are who they are. Who knows? They might have a criminal record, and you're like, oh, hold on a second. Do I really want to get involved in this and put my reputation, liability on the line?
Certainly.
There. The Gift of Fear. If you guys have you ever read that book?
I have not, no.
Okay, gift of fear. But my roommate in college, former FBI agent, worked for Gavin DeBecker, who wrote that book. Now, the book is about personal protection, but intuition is the number one thing that humans, where other animals do not. They fear it. Deers put their tail up, whatever it is. They run, whatever it is. Humans always want to, no, that can't be. I don't want to be judgmental. He sounds like he's legit, so I'm not going to make a judgment. If you have the intuition that something shady's going on, you need to stop and dig a little deeper.
Well, that's the thing with these fraudsters is they work off of human behavior. So sometimes you'll get these, sob stories of we need to close quickly. Yes, we need to close quickly. I have somebody who's in the hospital, family members dying, and so they really try to work off of that emotional fear and that human behavior versus just trying now to get through a portal to get a password. They're working off that human aspect.
So for the listeners, stay alert. If you feel there's something not right, make a few phone calls. Your title company is probably one place. Forewarn everybody's phone number and working it out. Okay. All right. So we actually, I don't know if we went into it specifically. What are some of the things as the account manager for Fidelity that you're doing consistently with the title companies? What is all the support that you're giving them as the account rep?
Sure. So like I said, we focus a lot on education. So we do a lot of lunch and learns, things like that for their real estate and lender partners.
You like doing those?
Yeah, I do.
Is that one of your highlights?
I do, yeah. So I focus a lot on the marketing side. So I do a lot of social media stuff, but we do also have a team of presenters and educators that will also teach on behalf of Fidelity to their customers, which is the real estate agents. And it's great summer for credit. So if you work with a title company or law firm that uses Fidelity, ask them if they have any upcoming classes, because we're always happy to offer those to you all. I think at the end of the day, the more we all are informed and are educated about the benefits of title insurance, the dangers of fraud, it protects us all. It protects the consumers. It protects the realtors and lenders involved.
All right. So education is one of your support things. What else do you give?
Yeah, like I said, marketing. So we focus a lot on marketing as well. So we do education, marketing. We provide them with underwriting support. That's first and foremost. We make sure that we can help them with these complex title challenges that come up. Even somebody who's been in the business for 30 years will still reach out with questions on how do we get this to close. This is why
computers cannot take over, because every transaction is different.
Oh yeah, very much so. And something that comes up in this transaction may not come up again for years. So in that time period, either rules and regulations could have changed, or they quite honestly just forgot how to go about handling this to clear that requirement before closing. All
right, so obviously the title companies, we talked about some of them pre-show, they've got people that their goal is obviously they want to bring in the real estate agents to refer them to business.
Correct.
Helping them with education. Is there anything else you're doing with them to aid them in that? Because that's kind of their mission, is how am I going to get the next deal?
Yeah, right. There are lots of title companies. I mean, it is a pretty saturated market. So what we do is try to help them stand out in the market. Let's find what your niche is. If you're a real estate attorney, okay, great. Can we work off of that to try to target some more real estate agents to send business your way? So I really try to help them identify, what differentiates you, what makes you different from ABC Title down the street. And from there is where we really try to hone in and target that. And I work on the social media side and all of that.
I'm going to ask, this is...
Sure.
You're the largest title insurance company in the country. So I don't know how many other title insurance companies are there in the market that are real players that actually have any sort of percentage.
About four.
So there's a hell of a lot more title companies locally than the 4 suppliers of the insurance.
Sure.
Right? So how the challenge that you has as an account manager, because you are literally, you might have a breakfast or, in the morning you're with this title company working on helping them, whatever their situation, maybe help with marketing, whatever. But then in the afternoon you're with this other title company that's just down the street.
Sure.
How do you work that?
Yeah, gosh, it's...
That's one just I thought of why we were talking here, because that is a challenge in your position. If someone wants to be an agency account manager, this is a challenge you have because everyone can relate to a car dealership. Okay, well, there's only so many Chrysler dealerships in Jacksonville, so there's 3 or 4 battling over the entire city. You have hundreds of title insurance companies, not title insurance companies, but title agencies. Title agencies, but only a handful of insurance. So it's kind of flip-flopped, but you can understand that you're helping all these people who are competing against each other, and they're relying on Megan for hopefully some expert advice.
Sure. But the resources available to all of them, right? And so you'll see some that will take it and run with it, and others I bring it to the table and they may not use it. So I can do as much as I can to them, but they have to be wanting to take advantage of all the tools and resources that we have. It certainly is a bit of a challenge, but each agency is different. I mean, there's some that have 30 employees, multiple offices. There's some that are small mom and pop, and they may want different things. And so that's my goal, is to identify what is it that you need. Is it just quick turnaround times, good, underwriting support? Are you looking for the marketing? What is it that your title company needs? And then I kind of strategically from there will
direct it. Yeah, because either you're doing it, you might be something you're expert, or maybe you're calling someone in from corporate who's might train in that particular
Correct.
area.
It just depends on what that agency needs, and they're all different. And so that's basically goal as an agency account manager, is to identify what those needs and those goals are for the agency, and then from there kind of tier it based off of the resources and the tools that we offer at Fidelity.
All right, so let's brag about Fidelity. So you have 4 competitors in the market supplying the same insurance product that you have. Obviously, you're trying to help these local title companies, and what we just talked about, to influence agents to work with their title company. Now, a lot of that has nothing to do with the insurance company. It's really the customer service that they're offering the agent.
Correct, the underwriting support.
They're friendly. They're on top of it. As you and I know, some companies are better than others locally. We can rate the list, but they're providing that customer service there. What is it that if agents are listening right now, why is it that they should look for a title company that uses Fidelity over, say, the other 3?
Yeah, well, to your point, we are the largest national insurance underwriter in the country. And so what does that mean for the home buyers? Well, first of all, it means that they're backed. All the policies that we issue are backed by a financially stable company. And what that means is that we have over $1 billion in reserves in the event that a claim were to come up. There's coverage there, so you don't have to worry about that part of it, and that's huge, right? I mean, unfortunately, there's some title companies, some insurance companies that don't have that type of reserves, and they can't even issue some of these larger transactions that we do. I mean, we just did one with a law firm in town, and it was a multi-state deal, and it was a $500 million policy, and there's some underwriters that wouldn't even be able to write that because they don't have the reserves in place in the event that there is a claim involved.
There's regulations, state and federal, I imagine, on this that require certain, requirements.
Yep, and you'll see some lenders will require it to be issued under a specific underwriter, and they're going to want to make sure that it's backed by a financially stable company. And so that is first and foremost the number one reason that you have that protection in place by using Fidelity.
Since we're on I think insurance people, it's like that, you got to have it, and obviously, homeowners insurance, totally different thing. In Florida, to battle, I just paid my car insurance now I got a teenager driving, so yeah.
Good luck with that.
Exactly. When it comes to claims on title, is it pretty cut and dry, like, hey, you made the mistake. You should have known that before we closed on the home. We paid you to do the title. Is it pretty good versus the insurance where your health insurance or your auto insurance or your homeowner's insurance might be, well, we're not covering that and this and that. Is it more cut and dry in the title compared to the other?
Yes and no, right? I think we identify these case by case. So we have a team of a whole claims department that reviews the claims that are submitted. But some of the main claims that we cover essentially are, fraud, forgery. If there's any, errors in the public records, you'll see sometimes that people will sign their own deeds and go and record them themselves. And unfortunately, it can affect the chain of title. So there's things like that could come up, outstanding mortgages that weren't paid. So we cover a list of those, but those are some of the primary ones that you'll see. And so it just, like I said, depends.
I guess the gray area is when people themselves start doing like quit claim deeds and this kind of stuff themselves versus, hey, I'm buying a home, I'm hiring X title agency to do the work. You guys are underwriting it, insuring it. The mortgage wasn't, there was a small HELOC that wasn't paid. That's pretty cut and dry.
Yeah, correct. And you'll see that. I mean, unfortunately, there's times where the HELOC doesn't get closed out and they'll charge it back up, right? And so now there's a $200,000 lien on the property from the previous owner, and that's where title insurance comes in. So for those, it could be.
So, yeah, that obviously can happen. Very much so. I can see it. I've had many of situations where there's a open home equity line showing up on someone's credit report. And I tell them, hey, where's this home equity line? Where does that attach to? And they're like, oh, that's the home we sold. And it's still sitting there as if it's active, which I imagine it obviously is.
Yeah.
So you protect the person you insured, the new owner of the home, or in obviously the mortgage company. But I imagine the person who charged up to $200,000 is not.
Well, we come back for that. Yeah. So yes, we pay out.
So you have to actually pay it to clear it.
Correct.
And then you guys are going after the actual person who they own the home and charged.
They signed a seller's affidavit stating that there were no outstanding liens. So, yeah, ultimately we're coming back after them.
Wow. Yeah.
So
I would imagine that. Shoot, that probably actually comes up a lot.
Yeah.
So,
yeah.
All right, we talked about the lender's policy and the owner's policy and the importance of the owners. We covered that question, so I'm not going to dwell on that one. How is title insurance priced in Florida? We talked about that as well. We jumped ahead on a lot of these things. Wire fraud. It's wiping out buyers and sellers across the country. Now, I personally don't have a story of that. I've heard about me, but I don't get involved. When someone says, hey, I need to wire the money, I'm like, title company, you need to talk to them. I wouldn't, from a lender, loan officer standpoint, I am not involved in sharing anything about wiring money. So where is this coming into play? Where does Fidelity play in the wire fraud?
Sure. So typically how this occurs is usually they're following the real estate agents. A lot of times real estate agents are using the Gmails, the Yahoo accounts, which are not secure, and they're able to infiltrate that and see who the buyer is or the seller is, who the title company is. And from there, they're kind of just watching this all unfold. And it typically occurs a lot of times right before it gets to closing, where they're going to send wiring instructions to, let's say, the buyer to wire their funds, and they think it's coming from the title company. They're able to copy their information, the contact information, their logo, so it looks like it's coming from the title company. And if you're a home buyer and you don't call and verify using a known trusted number, you could potentially wire your cash to close to a fraudster, and by the time you actually get to closing, it's too late. The funds are gone, and they're not going to come back.
How often are you seeing this just right here in Northeast Florida? Is this a monthly thing? You're seeing a situation like this happen?
All the time. All the time. Yeah, you have to be so careful and make sure that you are calling a known trusted number to verify that you're sending the funds to the title company. Like I said, a lot of times they're infiltrating these Gmails, the Yahoo accounts, and it's very easy for them to pose as the title company or the real estate agent. I would also recommend that real estate agents don't get involved with sending wiring instructions. Always have them go directly to the title company to obtain those and make sure that they're calling and verifying.
Loan officers, real estate agents, stay clear of anything having to do with that wire.
Yeah. You'll see now a lot of title companies are also using some sort of secure portal to provide these wiring instructions, so it completely takes it out of their email. So that's been a huge help in preventing the wire fraud. And then, like I said, there's also these third-party verification platforms where they can confirm the wiring instructions, especially too from a title company. You may be getting fake seller wiring instructions for proceeds. So they too want to make sure that the funds are going to the seller after closing and the accurate seller. So
how does Fidelity play into that? Are they insuring anything there, or what's Fidelity's play? Because to me, that sounds like it between the buyer and the local title agency.
Yeah.
Where does Fidelity come into play?
Yeah, you're correct. It's escrow related. It's not title related. So unfortunately, we do not cover these. And so we have seen title companies go out of business because they're wiring funds to the wrong place. And so we obviously provide all the education around that to make sure that they're calling and verifying this, putting these additional processes and procedures in place to make sure that their staff is educated on this, making sure that they verify, because a lot of times their E&O coverage won't cover this either.
What do you feel because I imagine all the different title companies you have, there's several different ways they're doing this. What is the best practice?
Yep. Education, first and foremost, making sure that everybody on their team knows the importance of confirming wiring instructions, and then having these third-party processes and companies in place like a Certified or Closing Lock, which are third-party platforms that they offer E&O coverage in the event that let's say they run the wiring instructions that they receive through the platform. If by chance they come back inaccurate, which usually they don't, they're no longer on the hook for it, which is huge. Taking that liability off of them is
providing the security of the transaction, just like when you go online and buy something, you see the little symbols down there. So they're backing that their system. They've got the cybersecurity.
Correct. They're confirming the bank accounts match the names of the accounts. They're doing all of that back end research to confirm that this is the seller, this is the seller's account. You are wiring the funds to the correct seller. So that would be my recommendation, is if you don't already have one of these third-party verification platforms in place,
Are there title companies locally? Are there some that don't? Yeah.
Yeah, and I'm not saying, as long as you have good processes and procedures in place, I think it's an extra layer of protection. But I strongly encourage, all of my title companies and law firms that I work with, I'm like, please look into these third-party platforms.
How about having an early conversation with the buyer, letting them know, do not do anything until we have sent you this, so you don't get that email and someone tells you, hey, you need to wire it now, and you might be a week before you really need to wire. And we know some people wait till the last minute or whatever, or last second really, to let the buyers know, educate them on this topic, because this is much bigger than I think it's much bigger than I imagined based on your description there. It's happening all the time.
Well, think about the amount of funds that are being handled in and out of these escrow accounts. So we are a big target for that because there's a lot of parties involved. So they're going to try to target every which way possible. I actually just heard, and this is the first for me, but I just heard of a completely made up lender, and that was new to me. And so the scam there, and I've only heard this once, but it was recent, and basically the home buyers went through the entire loan process with this lender. If you Google them, they looked legitimate, they had a website, all of it. And right before closing, the lender told the buyer, hey, wire us the funds, and then we'll wire it to the title company, which obviously, as you know, is not the case. They don't do that. They don't do that. So thankfully, the buyer was smart enough to call the title company and say, hey, my lender's asking me, to wire the funds there. So they're getting very smart. They're targeting buyers, sellers, realtors, lenders, you name it.
Well, because there are so many hands, and especially if you're not educating, as a real estate agent, you're not educating your buyers and sellers, they're just following the lead. And if they think the lead is taken, they're going there. The only thing the lender is going to ask for you is a credit card deposit for the appraisal. That's the only money that we take at any time. All the money goes to the title company as far as we're concerned, and then distributed out to where it needs to go. We're wiring money. The lender's wiring money to the title company.
Yep. And to your point, as far as Fidelity, a lot of what we also do is we are making sure that title agencies and law firms are utilizing best practices, right? Are they safeguarding the funds? Because they are managing it all, and they have most times millions of dollars in and out of their escrows. And so we, on a monthly basis, will get reconciliations submitted to us to make sure that they are, in fact, actually managing the funds properly. And so that's another big thing.
You're helping out with a lot of the because there are a lot of mom and pop shops, but even some of the bigger companies, they might just be citywide, even if they have a couple offices. They don't have necessarily the checks and balances where you're coming in, like the federal government might come into the bank and say, hey, we just want to make sure you're doing all the things that you're required to do as a bank. To come in and say, hey, here's some holes or some things where you might get caught, which might put you out of business. Someone steals a wire or something.
Right. So we're basically they're quality controlled with our QA team. And I look at that as a value add because there's some things that could go miss under the rug that they may just not have even been aware of. Shortages from files that have closed, like we kind of go in and we help them identify these issues that need to be resolved. And that's huge. I mean, there's some underwriters that don't require reconciliations to be submitted. And I think it's a huge value add to the agencies, especially those.
Explain that.
Sure.
Underwriter requiring reconciliations, would explain what you just said.
Yep. So kind of to go in more detail. So on a monthly basis, we want to do a checks and balances to see, okay, all money's in, all money's out. Mm-hmm. Right? Are there any discrepancies with the funds, shortages, outstanding liens? Let's say there's checks for taxes. Have they been paid or are they still sitting unpaid?
Ooh, I got one for that.
Yeah, you want to make sure that these larger, liens that need to be paid at closing, have they been cashed? Mm-hmm. Right? So we want to make sure that we're not opening up any additional liability on the escrow side, on the funds.
You tell me, the best way to handle this situation I had actually last year. It was all the way down in Palatka, so it's a small town situation. The taxes, it was a manufactured home, so the taxes were not that much. Mm-hmm. But the title company did not collect enough from the seller for their portion. They did not. So when the buyer came in and paid their portion, mm-hmm. which was accurate, they were short to pay the taxes. And I think it was like in September or something. So when the November taxes came around, the title company went to, was submitting basically the year's worth of taxes. Mm-hmm. They were short. So the tax collector doesn't take short. So you got to pay the whole thing. Mm-hmm. So they sat there mm-hmm. for months holding on to that money. Yes. And then I think it was about February or so when the buyer called me, my client called me. He's like, hey, what's going on? And I'm like, well, why are the taxes still due? And I'm like, well, you can call the title company. Say, turns out they never dispersed the taxes mm-hmm. because they didn't collect enough. And now we're not talking about thousands of dollars. We're actually talking about a few $100 mm-hmm. where they should have just eat it because they made the mistake and move on. Mm-hmm. But they refused to eat it, and they made the buyer pay the seller's end of the tax, which I thought was not good. I did not.
Yeah, and that's why you want to make sure all of that obviously is resolved at closing. But in certain instances like that, let's say it was thousands of dollars, that's where they have their own E&O, mm-hmm. errors and omissions coverage too. Could that be something that they run through that potentially?
Run through that, or obviously it's insurance, so you don't want to be making, I'm sure you're tracking claims.
Correct.
Who's making all the mistakes.
So yes, maybe eat it in that case if it's $100, a couple $100.
You might not have to make anything on the next deal, or that deal, just have to eat it. You made a mistake. Mm-hmm. That's on you.
And listen, we're humans. I mean, it happens, especially
all the time
when there's so many moving pieces in the puzzle of a real estate transaction. Things unfortunately do come up like that. And in that case, the title company probably should have just paid the difference.
Does Fidelity take you guys do any? I mean, imagine there's national conferences or events and stuff like that. Do mm-hmm. they bring you all in and mm-hmm. Bring all the account reps for education, that sort of thing? Not only locally, but from a national basis, from hearing from people all across the country.
Mm-hmm. Yeah, so we typically do it usually every other year. We just had ours earlier this year, and they did it more on a regional level, which was nice. It was smaller, but I think there's something to having it on a national basis to hear what's going on, let's say in Texas and New York, and kind of getting a better understanding of what they're seeing and hearing in their market. So yes, we do typically get together, which is always nice.
Well, I imagine the cyber guys, the fraud guys, they want to talk all the time. What's going on might start in California but be out here very quickly, and mm-hmm. vice versa. Yeah. Mm-hmm. So I was leading with that question to kind of lead into this one here. Is the real estate industry doing enough to protect buyers from these threats right now?
It's hard because, like I said, a lot of times the biggest threat are the Gmails, the Yahoo accounts, things like that it's easy for the fraudsters to infiltrate. You just want to make sure that you're educating them. To your point, if you're working with a buyer, let them know, hey, you're working with Sally Sue at ABC Title Company. This is the phone number that you're going to be calling them. This is the email address. If you hear from anybody else, stop and pause and call a known trusted number. So it comes from education, and I think that's where we lack a little bit. And so I appreciate doing these types of podcast interviews, things like that, to kind of spread the word. I think from the title side, they have these processes and procedures in place, and they're doing the best that they can with the technology and the information that's provided to them. But it really comes down to raising awareness as to the types of dangers involved.
I was just thinking, because we have to do continuing ed all the time, and then just within the company, and every year it's always the one on phishing attempts, with emails and stuff like that. And it's actually not. I was just thinking, it's not a bad idea for some of these title companies. It's just a 2 or 3 minute video to right at the beginning of the transaction or a week into it, send it out, say, hey, this could cost you a lot of money. I just want to send you this 3 minute video. Just watch. These are certain situations, not all, because the bad guys are always battling to find another way, and that keeps the cybersecurity guys always battling a way to defend. And so that battle is always going on 24/7.
Yeah. A lot of times, if you work with title companies, law firms, you'll see they have a little blurb at the bottom of their email communications about the dangers of wire fraud, to call and verify. And I actually have a story with one of our claims department attorneys, and he was telling me that a buyer unfortunately wired funds to a fraudster, and at that point they're going to try to sue anybody involved, the realtor, title company. They're going to get everybody involved to see if they can try to recoup some of those funds. And one of the things that came up during the litigation is that, yes, they did have that disclaimer at the bottom, but it wasn't bold, it wasn't big, it wasn't red. And so the buyer didn't see it. And that just goes that people don't read, right? Make sure you're actually reading the disclosures and the disclaimers that are involved in these transactions, and make sure that you're taking the necessary steps to call and verify using a known trusted number. I can't say it enough.
Yeah. Well, I think, people don't mind a short, quick, especially they're in the process. I know they're going to have to spend, you don't want a 15, 20-minute video because they're just like, whatever, they're going to blow, watch for, you got to keep it in short little chunks, but I think there probably, there's,
I think video is great, right?
A little short video showing you examples. This is what could happen, and then they watched the video because you can track that.
So actually, one of the closing platforms, Qualia, which a lot of the title companies are utilizing it, they actually require the buyer to watch a little video before they obtain the wiring instructions.
Yeah.
So there's that notice right there. There's no denying that they didn't watch the video, because they have to watch the video before they can receive the wiring instructions.
Yeah, that's brilliant. We kind of covered a lot of this question here, but the importance is the AI deepfakes showing up in real estate all over. They know there's multiple people, just as information out there. Be prepared. Look at the email. That's the one thing they train us on. Look at the email. Does it look like a legit email, or is there a letter or whatever, or something's not right about it, or they're asking you something and it's someone you haven't talked to, like as you mentioned, it should set off red flags. Oh, there's another fraud type most people haven't heard of, the mortgage payoff fraud. We haven't covered that. No, okay, because I don't remember saying that. Is that mortgage payoff fraud? What is it?
Mortgage payoff fraud, yeah. So typically with that, we've seen it where the title company will get an email from, let's say, the seller, real estate agent, or so they think are the seller or real estate agent, saying, hey, I'd like to see a copy of my payoff statement. I made a payment. Just want to make sure it's reflected on the statement. So title company unknowingly would send a copy of the payoff statement.
Yeah, what's the big deal?
Right. A couple days, maybe a week or so later, they get an updated payoff statement, which isn't unheard of. Sometimes some will send them automatically if a payment was reflected or whatnot. And the only thing that's different is those wiring instructions. And so, of course, it looks identical because they have a copy of the payoff statement. And so if a title company is not calling a known trusted number and they're going based off of the information on the updated payoff statement, they could wire the funds to the fraudster.
So the homeowner says they like to see the
quote unquote the homeowner.
Quote unquote the homeowner. So they get the legitimate payoff statement. Then that person puts different wire instructions and actually sends it to the actual
title company.
Actually sends it to the title company.
Yeah, so they'll send it back to the title company.
Oh, as if they're the lender.
Correct. Just providing an updated.
Must be updated, and this is where we need to wire the payoff funds to.
Yeah.
Ooh, yeah.
Yeah.
Wow.
So a couple things that they, once we started recognizing this type of scam, a couple things that agents have been utilizing to put in place is they're creating a safe sender list. A lot of times you're dealing with the same mortgage companies, right? Your Bank of America, your Wells Fargo. If you have worked with them in the past, you can create that safe sender list and you can put their wiring instructions, because most times, same thing as title companies, their wiring instructions shouldn't change. They should stay exactly the same. So if you can have that safe sender list, you can now verify based off of the payoffs that you're receiving. And so that's one thing that a lot of title companies have implemented to make sure that they're, verifying the correct.
I would imagine a lot of the big servicers, there's around the country, they're servicing a good portion of these loans.
Mm-hmm.
Did they use a secure portal for that? Like you were talking about the buyer sending it to the title company in a secure portal? Imagine there's a secure portal.
So a lot of times when you're getting a payoff statement, typically you're calling, the title company's calling the bank, requesting for them to send a copy of the payoff statement. And usually it comes over either via email or fax. So it's not really necessarily...
That's not secure at all.
Not secure. Yeah. I mean, a lot of times they're going to ask for like a borrower authorization because they want to make sure that they're disclosing this information to a party that's actually involved with the current homeowner. But once they receive those the payoff statement with the wiring instructions, it's usually either fax or email. So you have to, as a title company, call a known trusted number as well, make sure that you're getting the correct verification, or creating that safe sender list. Or like I said, there's those third-party verification platforms that they do a suite of different things to help fraud overall. And that's another thing, is they verify bank accounts for banks as well. So that's an extra layer of protection that some title companies and law firms are also utilizing.
It just, I think, talking about all the different things which is obvious if you really get down and have a conversation like you and I are having, that all these things that are going on, it costs money.
Yeah.
And so when you are going to closing, it's just like insurance or anything else, the cost of it is because of the risk of it. And you need people to be taking these extra steps. You need to be paying people properly. They're going to pay attention to where they're sending it versus you pay someone minimum wage, you're like, whatever, send the money over there. It's not their money. What do they care? They're only making whatever. You've got to have people that are going the extra mile. You got to take care of them, and that costs money. Yeah. And therefore, there's cost involved, your settlement cost or whatever, wherever that
you have to properly train, too. I think the instances where I've seen this happen is they hire somebody new, didn't realize the dangers of fraud, particularly, let's say, with the payoff statements, and they may not be aware. They see the new payoff statement, they put it on top of the file, the closer goes to wire funds, and they just assume that
someone verified it.
That someone verified it.
Yep.
Yeah. This
question came up because obviously we did a little back and forth. I gave you some questions. I put those questions and answers to generate some really hyper-focused, what are the trending topics right now? So obviously, we're creating great content. I don't know if this question is relevant, but maybe you do. The NAR settlement, change buyer's agent compensation. Did it change anything on the title and closing side?
I thought it would, but from talking with the title agencies and law firms, really not so much on their end. They just need to make sure that they're receiving the correct disbursement forms at closing, because that could delay
the closing. Who's getting what? Yeah.
Right, and you'll see it kind of last minute, and it's like, okay, they've already got the CD approved from the lender. Oh, but there is a transaction fee that needs to be included. So you want to make sure that you're getting those fees as early as possible to the title company so they can disclose them on the settlement statement. I would say that's pretty much the biggest thing that I've heard, is that they just need to have that as soon as possible.
What I'm hearing from you a lot, and to turn back to Fidelity and your position there, you guys are supplying a lot of value. You're supplying a lot of value because that has nothing to do with you. Fidelity has nothing to do with them dispersing money to real estate agents, but properly educating them, because a lot of these title companies are mom and pops. They don't have an in-house trainer. They don't have the resources that Fidelity has as the larger mothership, if you want to call it, to provide education on something that you guys are actually not directly involved in, but it's for the betterment of the entire industry and transaction.
Yeah, so, even when they switched over to the FAR contract, right, when our local NEFAR contract went away, we did a lot of education with our title agencies and their realtors to understand the difference in this contract. So we really focus on partnering with them to also bring value and education to their consumer and to their clients, which are the real estate agents and loan officers.
Right. Most agents wait until the contract is signed to call the title company. Is that too late?
In a traditional transaction, most times it's perfectly fine. You can work through clearing these requirements. Usually a closing takes, 30 to 45 days. Usually that's plenty of time. But if as a real estate agent, that there's going to be, ownership issues. Let's say there was a recent divorce, right? Let's say there's probate involved and you kind of want to get ahead of those. Doesn't hurt to maybe include the title agency in advance, and they can see about running either an O&E report, which is an ownership and encumbrance, to see what kind of, who has legal ownership and if there's any liens and stuff that are attached to the property.
What are some of the things that Fidelity and their title agency that we're working with locally, if a real estate agent has a true relationship that they're their go-to title company, that's where they want to send it? Because I think, we talked about having one of the David Heekin on. Everyone knows David here in Jacksonville. We talked, I remember this is 5 years ago, because he was like episode 20. We're 300 episodes and some beyond. But the importance of having for them, it's that closing and having that
relationship.
Just with that relationship, but just making you walk into a title closing, and a lot of times it's like a library. But it doesn't have to be a party either.
Sure.
But I mean, it should be a good time. There's a huge transaction, but obviously having that person who's doing the closing have some personality. Let's put it that way. Yeah, from that standpoint. But for agents out there to find that title company that's being supported by Fidelity there, how important is, you've been doing this 8 years, so you probably know a lot of the agents who are, the big supporters, or focus all their business towards one particular title company. Why is it that these top producers are doing that, and why is it important for them to do that?
I mean, as we talked about, we are in a relationship-driven industry, so you want to make sure that you work with a company that if you call, they're going to answer, right? Mm-hmm. The only difference between ABC Title Company and the one down the road is the people that you're working with. So if you can start to establish those relationships, they're going to go above and beyond to make sure that they're providing the good service to you, to your consumer. I mean, it makes you look good to your end home buyer or seller if you know that you can trust the work that's being done by these title agencies. So I think it's huge to build those relationships with the local title companies and law firms in town.
Is it safe to say, to kind of sell a little bit on Fidelity, that if they're working with a title agency that has the partnership with Fidelity and you, now they might not be taking advantage of all the education and so forth, but you're certainly providing, and it's on the table for them to eat.
Mm-hmm. Yep. Yeah, it's there. And from a realtor perspective and a home buyer perspective, when an agency is working with Fidelity, again, they're backed by one of the strongest title underwriters. So you know that your home buyer is getting the ultimate protection, which is, obviously you want that in the transaction. But as far as the resources and things like that, I mean, I'm happy to offer it to the agencies. Some don't utilize it.
This last question kind of brings us all together here, because I'm sure if I heard the names, know your competition. The 3 others here in town, for example, that are supporting from the insurance standpoint, the title insurance standpoint. If an agent is working, because that's who's listening right now primarily, is working with a title company, if they're not using Fidelity, what are they missing, and why should they be sitting down with you?
Yeah, first of all, ask your title agency, who are they using? What underwriter are they using? Because I think it ultimately makes a difference.
Underwriting,
to the end
when you
consumer.
say underwriter, using a specific name? Because I imagine you have hundreds of underwriters.
Well, so Fidelity National Financial is an underwriter,
right.
And we are, it gets a little confusing, so we are an umbrella, we're a family of companies. So you'll see if you are working with a home buyer and they get their final title policy, it's either going to have Fidelity National Financial, Chicago, or Commonwealth. So we're kind of an umbrella. So we operate all the same. The only difference is the paper that it's written on. But you'll see there are several other underwriters out there, but we are, in fact, the largest, and we issue the most policies throughout the country. So going back to what I said before, we are a financially stable company. And I think that's the biggest thing, is that they're going to have that protection in place in the event that anything were to arise, a claim were to arise after they close. And so you want to make sure that they have that backing for the title policy. Yeah.
Because it's ultimately the buyer who pays for the policy. The only person they see is the real estate agent and the person at closing. They don't see you.
Yeah.
They don't see Fidelity National. So if something goes sideways, those are the 2 people that they're looking at. So you want to have the backing there. Let's finish, just take a few minutes, because obviously How do the other, you guys, there's the Fidelity home warranty. What do they call the home warranty? Do you have a home warranty division? You have some other services there. Do you sort of represent them all here locally, or how do you blend them in? How does Fidelity, when I was at Quicken Loans Now Rocket, they used to eat our own dog food because they have so many, they do have a bunch of little different companies that do all sorts of different things. How do you guys blend that together?
So I mean, I'm sure you're familiar with Black Knight. That's another one of our sister companies. I think it's ICE now.
Yeah, ICE Mortgage Technology.
Yep. So they all kind of fall under the Fidelity family of companies. Like, I'll work with the home warranty folks on some level. Sometimes we'll co-sponsor events with agents. Obviously, there's agents that are using them for their home warranty services, but we really don't. Although we're a large company, we are very much individually.
Well, you don't want to mix, you don't want to be talking about home warranties and talking about title insurance in the same conversation.
Correct, yep. Yeah. So we all play our part, and it all falls under the umbrella, but they are essentially their own standalone company.
Okay. All right, last question.
Sure.
Why do you love what you do?
The people involved. I love being able to work in something that protects ownership. I mean, June is National Home Ownership Month, and I think title insurance does a really good job at protecting that for the end consumers. So I'm really passionate about that. I'm really passionate about helping my agents grow, making sure that everyone's educated in the process, and I work with really great people. I mean, my job is only as easy as the people behind me, our underwriters, our search and production team, and so they make my job a million times easier, especially when I'm forward-facing with our title companies and law firms. It makes my job that much easier knowing that I have them in the background doing all the behind the scenes stuff.
I appreciate you coming on.
Yeah, well, thank you.
Great show.
Thank you. Appreciate it.
This may be it for today's episode of Real Estate Excellence, but we both know your pursuit of excellence doesn't stop here. To connect with the best of the best and really take your skills to the next level, join our community by visiting TracyHayesPodcast.com, where you'll meet more like-minded individuals looking to expand their inner circle and their personal experience. That's available at TracyHayesPodcast.com.